Hi guys, welcome back to my YouTube channel. Today I'm going to discuss about car insurance. How does it work? An auto policy can cover many different risks and protect you financially. A car accident can be expensive, especially if your vehicle is badly damaged or anyone is injured. The rule of car insurance is to keep help cover the bills and protect you from potentially devastating financial liability. Here is how car insurance works. Some key takeaways of car insurance. A car insurance policy consists of several types of coverage, some of which will be mandatory or optional depending on where you live. Virtually every state requires drivers to have some form of car insurance and also sets minimum amounts. The price of auto insurance will vary according to the types of amount of coverage, the deductibles you choose, and other factors. How does car insurance cover? A car insurance policy consists of several types of coverage, some of which are mandatory in most states while others are optional. The most common coverage are bodily injury liability coverage. If you are involved in an accident that result in an injury to another driver or their passenger and you are at fault, this coverage will help pay any associate costs up to the limits on your policy. It is required in 49 states and the District of Columbia. The exceptions is New Hampshire, which allows driver to forego insurance but strongly recommends that they buy it. However, there are circumstances that proof of insurance is required. Property damage liability coverage. This covers any damage you cause to another driver's vehicle or other property, such as neighbors, friends. It is also required in virtually every state. Collision coverage. Collision insurance can cover damage to your vehicle in the event of an accident. It is optional in every state. Collision coverage. Let's see what is collision coverage. Collision insurance. Collision insurance. Collision insurance is auto coverage that reimburses the insured for damage sustained to their personal automobiles due to the fault of the insured driver. This type of insurance is often added as an extension of a basic automobile policy. The protect drivers in the event of damage from a collision. How collision insurance works? As the name implies, collision insurance repairs the insured for damage from an actual collision. It doesn't cover damage due to theft or vandalism. It also does not cover damage that is fed from another driver policy if the driver was at fault. Some key takeaways of collision insurance. Collision insurance is coverage that reimburses the insured for damage sustained to their automobiles when they are not at fault. This type of insurance is separate from a comprehensive automobiles insurance policy but often added an extension. When two drivers are in an accident, collision insurance pays for the damage and it will cover damage from potholes and accident involving inanimate object. Collision coverage is often expensive to purchase. The premium may be lowered by choosing at $500 or a higher deductible. Comprehensive auto insurance covers event out of a driver's control. Collision insurance covers event with a driver's control or when another driver hits your car. Collision coverage is very important for protecting your vehicle against the financial loss that comes with physical damage to your vehicle. It's not hard to get into an accident when an accident happens when is always at fault and that could be you. Important point is given collision insurance will cover damage from a collision with another vehicle, tree, pole, guardrail, and most other possible roadway hazard. Quick fact on collision insurance: collision insurance can be bought only in conjunction with liability and comprehensive coverage. Collision insurance repair damage when two vehicles in drive or reverse collide with each other. Collision insurance will cover damage to your vehicle if you hit ice and slide into an inanimate object. Collision covers potholes damage. Collision coverage can be expensive, but people can save on premium by choosing at $500 or higher deductible. In this collision insurance, automobile policy is given. Let's see automobile policy. Auto insurance: when you buy a lease a car, it's important to protect that investment. Getting auto insurance can offer reassurance in case you are involved in an accident or the vehicle is stolen, vandalized, or damaged by a natural disaster. Instead of paying out of pocket for auto accident, people may annual premium to an auto insurance company. The company that pays all or most of the cost associated with an auto accident or other vehicle damage. Some key takeaways of auto insurance: car insurance is designed to protect you against financial losses if you are involved in an accident or the vehicle is damaged in some way. Most states require you to have minimum amounts of liability insurance coverage. Some also requires you to have other coverage types such as uninsured motorist coverage. Premium are what you pay monthly, biannually, biannually, or yearly to maintain a car insurance policy, while deductibles you amounts you pay when you file a claim. It's important to shop around for the best car insurance rates to find the right coverage for your vehicle at the right price. What is car insurance? Car insurance is effectively a contract between yourself and the insurance company in which you agree to pay premium in exchange for protection against financial losses stemming from an accident or other damage to the vehicle. Auto insurance can offer coverage for vehicle damage including your car or another driver's vehicles. Property damage or bodily injuries caused by an accident, medical bill and other funeral expenses associated with injuries sustained in an accident. The exact details of what's covered depend on the minimum coverage requirements for your state and any additional coverage options you choose to include. Every state except New Hampshire requires drivers to have a minimum amount of bodily injury liability coverage and property damage liability coverage. Auto insurance cost. There are two primary costs associated with purchasing car insurance: premium and deductibles. Auto insurance premium vary depending on age, gender, year of driving experience, accident and moving violation history, and other factors. Again, most states mandate a minimum amount of auto insurance. That minimum amount varies by state, but many people purchase additional insurance to protect themselves for further. Additionally, if you are financing a car, the lender may stipulate that you carry certain types of car insurance. For instance, you may need gap insurance if you are purchasing an expensive vehicle that will likely depreciate very quickly once you drive it off the lot. Gap insurance can help to pay off the difference between the vehicle's value and what you still owe on it. If you are involved in an accident, a poor driving record or desire for complete coverage will lead to higher premiums. However, you can reduce your premium by agreeing to take on more risk, which means increasing your deductible. Your deductible is the amount you have to pay for filing a claim before the insurance company will pay out anything to you for damages. So, for example, your policy may have a $500 to $1,000 deductible. Agreeing to a higher deductible can result in a lower premium, but you had have to be reasonably sure you could cover the higher amount if you need to file a claim. Some tips has given. Ask your insurance company about ways you may be able to lower your car insurance rate, such as getting a safe driving discount or taking a defensive driving course. What is defensive driving course? Let's see. 15 tips and ideas for cutting car insurance costs. Do not pay more than you have to. Car insurance is necessary to protect you financially when behind the wheel. Whether you just have basic liability insurance or you have full auto coverage, it's important to ensure that you are getting the best idea possible, wondering how the lower car insurance. Here are 15 stages for saving on car insurance costs. How much does car insurance cost? Car insurance costs are different for every driver depending on the state that live in. The choice of insurance company and the type of coverage they have, but when trying to save money on car insurance, it helps to know what the typical driver face. On average, the typical person spent $1,190 on car insurance in 2018, based on the latest figure available from the National Association of Insurance Commissioners. According to the NAIC data, the car insurance premium rose 30% between 2014 to 2018, despite the number of insured vehicles only rising by 7%. Data from AAA put the average cost of car insurance for new vehicle in 2020 slightly higher at $1,202 annually. The numbers are fairly close together, suggesting that your budget for a new car purchase you may need to include $100 or so per month for auto insurance. To plan this is auto insurance I have discussed about. Just now I discussed about defensive driving course. How auto insurance work. In exchange for paying a premium, the insurance company agrees to pay your losses as outlined in your policy. Policies are priced individually to let you customize coverage amount to suit your exact needs and budget. Policy terms are usually 6 or 12-month time frame and are renewable. An insurer will notify a customer when it's time to renew the policy and pay another premium. Regardless of whether they mandate having a premium amount of auto insurance, nearly every state requires car owners to carry bodily injury liability, which covers costs associated with injuries or death that you or another driver causes while driving your car. They may also require property damage liability, which reimburses others for damage that you or another driver operating your car causes the another vehicle and other property. A number of states go a step further, mandating car owners carrying medical payment or personal injury protection. Whose A number of states go a step further, mandating car owners carrying medical payment or personal injury protection, which reimburses medical expenses for injuries sustained by you or your passenger. It will also cover lost wages and other related expenses. Uninsured motorized coverage reimburses you when accident is caused by a driver who does not have auto insurance. Underinsured motorist coverage is designed to protect you when you are involved in an accident with a driver who has some insurance but not enough to cover the full cost of a claim. So friend, now I'm going to see what is uninsured motorist cover, what the definition is given for uninsured motorist coverage. Keep watching my video till the end. Uninsured motorist coverage, the abbreviation is given UM. It means uninsured motorist. Uninsured motorist coverage is a component of an auto insurance policy that provides coverage when the policyholder is in an accident when someone who doesn't have insurance. It is an add-on to a standard auto policy and pays for injuries to the policyholder and passenger. What is uninsured motorist coverage? Uninsured motorist coverage is a component of a auto insurance policy that provides coverage when the policyholder is in accident with someone who doesn't have insurance. It is an add-on to a standard auto policy and pays for injuries to the policyholder and passengers, and in some instances for damages to properties if the other driver is legally responsible for the accident but uninsured. In some states, it is required that auto insurance policy include uninsured motorist coverage. Some key takeaways of uninsured motorist coverage. Uninsured motorist coverage is an add-on coverage for auto policies that will pay for injuries and damage caused by an uninsured driver. Hit and run drivers are also considered uninsured motorists. Uninsured motorist coverage usually adds on a small cost to an auto insurance policy but provides beneficial coverage. How uninsured motorized covers work. State laws generally mandate that motorists carry some level of automobile liability insurance coverage, and these requirements vary from state to state. 19 states plus Washington DC requires that policies include uninsured motorized coverage. New Hampshire and Virginia are the only US states that do not require a minimum amount of auto insurance coverage. Despite these mandates, one in every eight US driver on the road does not have insurance, reports the Insurance Research Council. The organization's latest reports on this subject found that Florida had the highest number of uninsured drivers at 26.7%, followed by Mississippi, New Mexico, Michigan, and Tennessee, the state with the lowest number of uninsured motorists is Maine with 4.5%. Uninsured motorist coverage is designed to protect you against financial losses stemming from an accident in which the other driver lacks adequate coverage. If you are involved in an accident and the other driver is at fault, you will file a claim with the driver's insurance company. If the claim is successful, you could use the proceeds to repair your car or pay for medical bills associated with injuries from the accident. In cases where the driver lacks sufficient coverage or any types of car insurance at all, having uninsured motorist coverage can minimize anything you might have to pay toward vehicles repairs or medical bills. Again, this may be optional depending on where you live, but having the coverage could offer some reassurance if you are involved in an accident. Important, there are two types of uninsured motorist coverage. Uninsured motorist bodily injury covers medical bill related to a crash, while uninsured motorized property damage pay for damage to your car. Uninsured motorist BS uninsured motorist coverage. In addition to uninsured driver, there are also those who have some insurance, but it may not be enough to cover the full cost of a claim if there is an accident. Again, the most requires driver to have minimum levels of at least liability coverage. But a driver who's hoping to save on their car insurance might optional for the lowest coverage amount, which could lead the financial consequence for other drivers if they are involved in an accident. It's important to be aware of the distinctions since uninsured motorist coverage is not the same as uninsured motorist coverage, which would cover a situation in which the at fault driver did not have enough insurance to fully cover the other insured party's damage. However, these two types of coverage may be bundled together either separately or together. They are usually a relatively inexpensive add-on to an auto insurance policy but provide beneficial coverage. Note some states allow to stake uninsured motorized and uninsured motorized coverage when you have multiple vehicles listed on the same policy. Requirement for claiming uninsured motorized coverage. During the investigation of an accident, if the at fault driver does not have insurance, the police will inform the other involved drivers. If the police do not respond to the accident or in the case of a hit and run crash, try to gather as much information as possible. Ask for names, address, and phone numbers of potential witnesses. If possible, get the license plate number of the other car and take photograph of the accident scene. As soon as possible, file a claim with your insurance company providing all the information you may have. Some insurance providers will have a limit on how long you can wait before you file the uninsured claim. These limits will vary by company. As the insurance company settles your claim, it will want copies and billings from the medical care received and any automobile repairs that resulted from the event. If the insurance provider decided the costs submitted with the claim are unnecessary or not related to the accident, they will deny those amount. If the policyholder disagrees with the decision of the insurance provider, the case will usually go the binding arbitrations. What is binding arbitration? Let's see. What is arbitrations? Arbitration is a mechanism for resolving dispute between investors and brokers or between brokers. It is overseen by financial industry regulatory and the decisions are final and binding. Arbitrations is distinct from mediation in which parties negotiate to reach a voluntary settlement and decisions are not binding unless all the parties agree to them. Arbitration is not the same as filing an investor complaint in which an investor alleges a wrongdoing on the part of a broker but has no specific dispute with that broker for which the investor seeks damages. How arbitrations work? In practical terms, arbitration is a similar to a lawsuit but may be preferable for all parties due to the lowest cost and time commitment involved. Some key takeaways of arbitrations. Arbitrations is not the same as filing an investor complaint. Arbitration could be preferable than a lawsuit due to the lower cost and time commitment for all parties involved. Dispute involving less than $50,000 do not require in-person hearing. For dispute ranging from $50,000 to $1 lakh required an in-person hearing with a single arbitrator. When an investor or broker has a specific dispute with a broker, deed is registered with FINRA. They may file a claim with FINRA and that states the alleged misconduct and the amount of money they are seeking in damages. FINRA will appoint a panel of three financial industry professionals who, unless the injured party requests otherwise, will not be employed in the securities industry. This is intended to eliminate bias, but if one of the parties suspects that a member of the panel is biased, they may request a change. Arbitrations hearing for dispute involving less than $50,000 in person hearing are the considered necessary rather both parties submit written materials to a single arbitrator who decide the case. For dispute ranging from $50,000 to $1 lakh in person hearing with a single arbitrator are the most common.
আমার আমার এখন ওইটা তো ওরা পাইবো ধরেন 1100। শিফাতের ধরেন 700। হ্যাঁ। ওনার আরো ধরেন 500। রাসেলের 1000। রঞ্জনাটা রঞ্জনাটা অ্যাড করছেন? কি হয়েছে? চ্যানেল গেছে গা? আর চ্যানেল কয়টা ছিল? চ্যানেল কয়টা ছিল? চোদ্দটা। আমাদের এখানে প্রায় সব ম্যাক্সিমাম ম্যাক্সিমাম মানুষের ইন্স্যুরেন্স।
Arbitration hearing for dispute involving less than $50,000 in person hearing are the most considered necessary. Rather, both parties submit written material to a single arbitrator who decide the case for disputes ranging for $50,000 to $1 lakh in person hearing with a single arbitrator are the most common. For disputes over $1 lakh in person hearing with three arbitrators are standard. A majority of three arbitrator panel, that is two people, is necessary for a decision. Arbitrators are not required to explain their decision. Parties filing for arbitration may represent themselves or they may hire a attorney. In general, arbitration panels are less formalistic than the court system, so investors have a reasonable chance of being successful even when representing themselves. Important, there is fees associated with filing for arbitration, not to mention the time and travel expenses involved, which investors should consider when pursuing this option. Special consideration: arbitration panel do not necessarily cover the full amount sought in the dispute. For example, if an investor files a claim against his or her broker for $38,000, the panel may decide in the investor's favor but not only award $10,000. Arbitration decisions are binding and not subject to appeal except under very limited circumstances. FIDRA mediation process, on the other hand, is the binding unless both parties agree to the settlement. The Public Investors Arbitration Bar Association has criticized FINRA for lack of diversity on its arbitration panel and lacks safeguards against bias and conflict of interest. The regulator has argued that this criticism are misplaced, particularly the focus on arbitrators' age. In their terms of service, most brokers require investors to agree to mandatory arbitration to settle potential dispute rather than going to court. Since FINRA has a near monopoly on arbitrations, the organization panel are many investor only recourse. Then friend, just now we discussed about bonding arbitration. I hope all of you understand what we have discussed. Uninsured motorized coverage reimbursements you when an accident is caused by a driver who doesn't have auto insurance. When you an accident caused by a driver who doesn't have auto insurance, under insured motorist coverage is designed to protect you when you are involving in an accident with a driver who has some insurance but not enough to cover the full cost of a claim. Some notes of car insurance. Getting a car insurance policy above the minimum limit set by state law may increase the cost of coverage, but it could not benefit later if you are involved in an accident. Who does auto insurance coverage protect? An auto insurance coverage protect you and other family members on the policy, whether driving your car on someone else's car with their permission. Your policy also provide coverage to someone who is not on your policy and is driving your car with your consent. Personal auto insurance only covers personal driving. It will not provide coverage if you use your car for commercial purposes such as making deliveries. Neither will it provide coverage if you use your car to work for ride sharing service such as Uber or Lyft. Some auto insurer now offer supplemental insurance product at additional cost that extend coverage for vehicle owner that provide ride sharing service.
শেষ হয়েছে না এখনো? रूट चलाना पड़ेगा ना, इतना जल्दी खत्म नहीं होगा।
What is premium in car insurance? What is a premium? Premium has several meaning in finance. Most commonly, it refers to generically a security trading above it interesting or theoretical value is trading at a premium in contrast to a discount. The difference between price paid of a fixed income security and the security's face amount at issues is referred to as a premium. If that price is higher than par, the purchase price of an insurance policy or the regular payment required by an insurer to provide coverage for a defined period of time. The total cost to buy an option contract, often synonymous with its market price. Key takeaways: premium can mean a total number of things in finance, including the cost to buy an insurance policy or an option. Premium is also the price of a bond. Premium is also the price of a bond or the other security above its insurance price or intrinsic value. A bond might trade a premium because its interest rate is higher than the current market interest rate. People may pay a premium for certain and demand items. Something trading a premium might also signal it is overvalued. Understanding a premium. Broadly speaking, a premium is a price paid for above and beyond some basic or intrinsic value. Relatedly, it is the price paid for protection from a loss, hazard, or harm. That is, insurance or option contract. The word premium is derived from the Latin premium, premium, where it means reward or price. Types of premium. Price premium, a price that exists above some sort of fundamental value is referred to as a premium, and such assets or subjects are said to be trading at a premium. Asset may trade a premium due to increased demand, limited supply, or perceptions of increased value in the future. A premium bond is a bond trading above its face value, or in other words, it costs more than the face amount on the bond. A bond might trade at a premium because its interest rate is higher than current rates in the market. The concept of a bond price premium is related to the principle that the price of bond is inversely related to the interest rates. If a fixed income security is purchased at a premium, this means that then current interest rates are lower than the coupon rate of the bond. The investor thus pays a premium for an investment that will return an amount greater than existing interest rate. A risk premium involves return on a asset that are expected to be in excess of the risk-free rate of return. An asset's risk premium is a form of compensation for investors. It represents payments to investors for tolerating the extra risks in a given investment over that of a risk-free asset. Similarly, the equity risk premium refers to an excess return that investing in stock market provides over a risk-free rate. This excess return compensates investors for taking on a relatively higher risk of equity investing. The size of the premium varies and depends on the level of risk in a particular portfolio. It also changes over time as market risk fluctuates. Option premiums for options are the cost to buy an options. Options give the holders owner the right but not the obligations to buy or sell the underlying financial instrument at a specified strike price. The premium for a bond reflects changes in interest rate or risk profile since the issuance date. The buyer of an option has the right but not the obligations to buy or sell put the underlying instrument at a given strike price of a given period of time. The premium that is paid is intrinsic value plus its time value. An option with a longer maturity always costs more than the same structure with a shorter maturity. The volatility of the market and how close the strike price is the then current market price also affected the premium. What does paying a premium means? To pay a premium generally means to pay above the going rate for something because of some perceived added value or due to supply and demand imbalance. To pay a premium may also refer more narrowly to making payments for an insurance policy or option contract. What is the another word for premium? Synonyms Synonyms for premium include price, fees, dividend or bonus in insurance and option trading. It may be synonymous with price. What are premium pricing example? Premium pricing is a marketing strategy that involves tactically setting the price of a particular product higher than the either the more basic versions of a product or versus the competitions. The purpose of premium pricing is to convey a higher quality or desirability than other options. So guys, just now I discussed about collision coverage. Next, let's see comprehensive coverage, also known as other than collision. Comprehensive covers damage to your vehicle from causes such as flooding, a fallen tree, or a fire. It also covers you if your car is stolen, like collision coverage. It is optional. Medical payment, personal injury protections, mandatory is some state mid-pay or PIP means personal injury protections covers medicals bill and related cost if you or a passenger in your car are injured in an accident. Uninsured or underinsured motorized coverage if you are ever in accident with someone who doesn't have car insurance or whose insurance is not sufficient to cover the damage they have caused. This insurance can cover that shortfall. It is mandatory in some state. If you are leasing a car or have an outstanding ছয় ন, auto loan, you might also consider a separate type of policy known as gap insurance. In the event that your car is declared a total loss after an accident, gap insurance will cover any difference between what your auto insurance company pays you and what you still owe on your lease or loan. Who does car insurance cover? In general, a personal auto insurance policy will cover the policyholder and any family members listed as drivers on the policy. Policies also typically cover anyone who is not on your policy but is driving your car with your consent. How much does car insurance cost? According to AAA, annual premiums for full coverage insurance, liability plus collisions and comprehensive average $1,296 to $1,403 depending on the size of vehicle in 2021. Still, your cost could be much higher or lower. Thank you so much guys for watching my video till the end.